Hello, everybody. It's Thursday. Happy Thursday. Thank you all for joining. Let me make sure that, hey, happy Thursday. It is. That was a little echo sound test. So let's jump in. Big day. Markets are doing really well. Things are good all across the hood. Crypto market is about 1.26 trillion, up about 30 billion since I did this last. 24 volume. 30 billion again. That's interesting. The actual volume is the same as the gain in the market cap. Fascinating. Anyway, Bitcoin is just hit 26.7 and it's more than a 2-week high. And we could be making history. 77% of the time, Bitcoin actually falls in September. But maybe this time is different. A lot of things are very different this time around. Bitcoin dominance about 49%. ETH 1635. And what else is going on? Oh, I nearly forgot. Shout out to Team Singapore. There is the Token 2049 conference right now happening live. So hope people there are tuning in if they're not at the conference or at the bar getting, sozzled. So let's jump in. Of course, this is a disclaimer. It's just edutainment. And subscribe if you want to learn a lot. Today's story, we're going to cover just about everything. Some good news, some ugly news, and some interesting news too. Let's start with Bitcoin first. This is a pretty cool chart. As we pivot to AI algorithms over at the cryptocurrency analytics and forecasting platform called Price Predictions have predicted the Bitcoin price would hit $27,073 by October 1st. Well, we are literally $300 away from that right now. So not a biggie, but I thought that was interesting. So once we get to that 27K, then it's 28K, and then get back to 30K, and then everything will happen and change pretty radically, I reckon. So we don't need an algorithm to tell us that. Let's look at stock to flow. It's kind of interesting. We are in the early bull market, and Bitcoin is viewed as a digital commodity, just like gold, and a long-term store of value, owing to its very limited programmed supply inflation. In fact, I'd argue it's deflationary because people lose their keys all the time, and the halving event and other things. But the stock to flow model typically is used to value commodities. We've talked about it many times here before. And this is Plan B, stock to flow for Bitcoin. Now, as of today, September 14th, 2023, the stock to flow model predicts Bitcoin should have a value of $51,692. But right now, with the price just above 26K, it is half the projected fair value. So if anybody believes in stock to flow, Bitcoin is darn cheap right now at this stage of the cycle. So we'll see where it goes. Again, many people, still very few, understand what Bitcoin is and what it's for and how it works and if they can trust it, etc., etc. So let's talk about the institutional wave coming. We did touch on this a few days ago. Franklin Templeton seek to offer spot Bitcoin ETF in the US. Big news there. And the impact of those guys will be huge. They have about 1.4 trillion in assets under management, which will have a massive impact. Now, what's also happening, when it rains, it pours, the floodgates open, the tsunami is coming. Well, Deutsche Bank, they just said they partner with a crypto company called Taurus to launch a new custody service for institutional clients. The bank has been public about its optimistic views on Bitcoin, and the partnership aims to gain a stronger foothold in the nascent sector. Deutsche Bank is huge. I think it is the second biggest, if not the biggest bank in Europe right now. Don't quote me on that. I could be wrong. It was at one stage, but banks are changing right now, many different ways. We saw what happened in Switzerland earlier this year and in the US too. So let's jump ahead. And I did tweet earlier, just in from Watch Your Guru, the $1.34 trillion asset manager, Deutsche Bank, very close to the, actually 1.34 trillion euros is about $1.6 trillion. So they are bigger than Franklin Templeton. And I said in my sarcastic tweet, move along, nothing to see here. No institutional tidal wave on the horizon. No, but really, there's still so much bearish sentiment. Can they not see everything that's happening behind the scenes with massive allocators? Instead, the retail analysts on Twitter are saying, oh, it's going to go down to whatever. This thing is so hard. The supply is so scarce. it's just going to be such an exciting time to be alive. So let's jump on. Blackrock as well. Their spot ETF rejection, apparently, according to a NASDAQ executive, was simply procedural. They just need time, not final. Again, it's going to happen. We just don't know when exactly, but the spot ETF is coming. So let's talk about Ethereum for 1 second. And excuse my typo, that should be Spike. Ethereum spike in addresses. The network saw 1.1 million unique addresses popping up as a sender or receiver on ETH just yesterday. That's the second highest amount ever in the history of the asset in over 8 years. And this historic anomaly could be capitulation signal needed for prices to rebound. Everybody is getting active again, not just for Bitcoin. Bitcoin had a big volume day as well over the last 24 hours, but Ethereum is coming back. Crypto is alive. Again, I tweeted that, I think it was Monday, I said, Bitcoin is alive. So it's all happening. You just need to be patient and be in the right positions. And in addition, and now everybody's saying today, despite an expected sell-off, Solana's up. Yes, it is. Told you so. I did my FTX dumpage video a few days ago. That it would be a nothing burger, and here we are. Lots of nothing burgers these days. And also another good news as well. As I say, they are my two biggest positions after real estate. Tesla and Bitcoin, a marriage made in heaven. Elon Musk said they would, of course, resume Bitcoin payments when mining is 50% sustainable. And Bloomberg just published a report confirming that it is 50% sustainable. So when is he going to resume payments? Who knows? He is a big believer. And imagine, Elon, if you're listening, imagine integrating your Bitcoin payments for your Tesla through Twitter, X. That would be impressive. And it's very feasible and easy to do. That'd be neat. Tying in your social identity to your wallet and your whole life. That's where we're going, ladies and gentlemen. Exciting times. Speaking of Tesla as well, they have now cracked the code on basically doing a single piece car casting. Now, if for those of you who are old enough to remember Matchbox cars, I think in the US they call them Hot Wheels or something. It was just a little metal frame base and the top just plugs onto it. And I think that's what they are now able to do. They can do half a car stamping, but they're going to move to the full car. The entire underbody of the electric vehicle will be a single piece. And this innovation will be facilitated by use of the world's largest casting machines. They have a 9-ton one, GigaPress, and it'll be used not only for the Tesla $25,000 EV launch, set to launch, well, they're going to be building it in Austin now, not Mexico. So that could be, we could see the first versions of those pop off the line late 2024, early 2025. Again, don't quote me on that. But, between 3D printing, molding, all this cast molten alloy stuff. And people always say, well, anybody can get a GigaPress and press the cars. And that's what all the other companies are trying to do, like Hyundai and German car makers. But it's more difficult because of things like unions and because of things like the special consistency of the molten alloy that SpaceX have apparently developed. And of course, SpaceX shares their IP with Tesla. So again, stamping a car is not easy, especially when you're pumping, a huge amount of molten aluminium or stainless steel or whatever through a GigaPress in seconds, and it has to dry in seconds. It's, anyway, far beyond my pay grade. Speaking of Tesla as well, Tesla bet big on wireless charging. Obviously, we know robo-taxis are coming. Again, we don't know when, but we know they are coming, especially with the breakthrough in FSD12. There will be literally steering wheel, pedalless vehicles flying around, picking up people, dropping them off in cities, coming to you within the next year to year and a half. And these things will need to charge themselves as well. That's why I think Tesla bet big on this wireless kind of EV charging thing. But for those who don't believe it, well, it just went live today in Austria. Is from Sawyer Merit. The first e-taxi stands now with wireless charging have been put into operation in Austria. 66 electric taxis and 60 charging points will be equipped with EaseLink's conductive charging technology. So it's not pie in the sky. It's real. It's happening. You just be able to park your car and car will charge and everything. Just fantastic. Now let's talk about the S Curves too. This is from Bloomberg. Just came out today. let's look at this little chart here. And it's hard. We have spoken for a long time about it's hard for humans to fathom exponentiality. And for those ice lovers, it's happening, and it's happening fast. And this is a chart that shows you how fully electric vehicles, not hybrids, but they surged to 3 million units in the US. But it took 10 years to hit the first 1 million, 2 years to hit the second million, and 1 year to hit the third. So let me try to break that down in simple terms. So the first 10 years, it was a rate of 100,000 cars per year. Break it down equivalently. Second phase, it took 2 years to do the next million cars. That's 500,000 cars per year. Now we're at 1 million cars per year. And this is the S curve we're talking about. It's a mathematical function of the rate of growth, how it increases over time until it reaches a point of saturation, which is normally 85 to 90%. And then it slows down. But the next 6 years, ladies and gentlemen, this S curve is going to be happening. It's already, the toothpaste is out of the tube. I haven't said that in a long time. And it's not going back in. It's only going to accelerate. So, and the reason I'm stressing this is because there's other stuff happening, which is kind of weird. So, there is a big threat of a strike in a few hours at Ford, General Motors, and Stellantis. People ask me, why don't I short them? Because they're still being bailed out by the government. But we'll see what happens soon. The clock ticks down towards potential UAW strike against the big three Detroit automakers. And this guy is Sean Fain, I think is his name. Sounds like Sinn Féin. The UAW is demanding things like a 4-day work week, not 5-day, 4, 46% wage increase, full pensions, a share of company profits, and pay when striking. And I just fear that it's going to kill the employer's ability to compete, especially during this S-curve transformation. And I understand the need for workers to get their fair share. I'll be talking more about how people are getting poorer in a few slides. This whole tapestry weaves perfectly together today. It's ugly, but at the same time, GM and Ford, they're not geared to be able to make any profits right now on EVs. They have to, and this is not going to help. This is probably going to accelerate their demise, in my opinion. And in fact, related to that too is oil. everything is related. Everything is connected, as I always say. OPEC just said that global oil markets will face a massive supply shortfall next quarter. They're doing this intentionally, ladies and gentlemen. They have the US over a barrel, excuse the pun, and that shortfall will be 3 million barrels a day. And if OPEC is correct, it will result in a huge inventory drawdown and a spike in prices. We're already seeing that happening. About a month ago, I was saying, I'm not surprised if we see $90 to $100 oil by year end. Well, it happened a lot faster, and risk happens fast. We're already above $90 today. Last time I checked the oil markets. And guess what General Motors is doing with expensive oil? They're building or investing $1 billion in building a new V8 engine. Okay, so, I mean, the world is pivoting to EVs, and GM is investing $1 billion in developing gas-guzzling engines. The price of oil is going through the roof because OPEC is controlling the price, etc., etc. Now, if people, gas-guzzling nonsense, I'm going to say it, but if you think Legacy Auto are a legitimate competitor to Tesla, you're not living in reality. And I think it was Farzi that said that as well, Farzad. So shout out to you there too. Now let's switch gears and get back to what we talked about earlier with the strike and why it's important. Because everybody is facing a financial decline since 2019. This is from the Census Bureau, and the data is shocking. You can see here the bottom 10% median household income fell 6.3% down to 35K. Then these are all kind of quintiles, which means 20% slots. And according to the Census Bureau, the median household income adjusted for inflation dropped to $74,580 in 2022, a decrease of $3,670 since 2019. But if you look at all the chunks of how things are really, people are making far less than they were in 2019, even with all the money printing, etc., which drives inflation and currency debasement. And you can see how this all ties to Bitcoin, obviously. I don't even need to mention that. But the top 5%, their median household income fell by 4.1%. The top 20th quintile, down 2.5%. They did kind of the least worst. The fourth, 20%, down 3.6%. Third, 20%. That's kind of between the 40 and 60 percentile, down 4.4%. The second 20%, 5.2%. And the bottom really gets smashed the worst. So it is ugly out there. And this is despite, C19 relief measures, 6 trillion. As you know, money printing is just bad. People are suffering. Inflation is a killer, yada, yada, yada. You get the message. Another view of this as well is from Bloomberg. And shout out as well to Shamath. He shared this on his Twitter today as well. And I saw it after I put my little chart together. I wouldn't have bothered making my chart if I had this one. But you can see here another view of how U.S. incomes have fallen every year of the Biden presidency. These are Shamath's words, not mine. I'm not political. Median incomes fell. Again, that's 74,580. 90th percentile fell to 216,000. And the bottom 10th was 17,100. The poverty rate, which is the supplemental poverty measure based on post-tax income and includes government transfer payments like stimulus checks, rose to 12.4%. This was the first increase in the poverty rate since 2010. And income inequality grid index fell to 0.488. Some people call this a Gini coefficient, and it reflects, I think, a Gini coefficient of 0 is perfect equality, and 1 is a maximum inequality, and we're right pretty much bang in the middle. So it's not good. It is not equitable by no stretch. So from this perspective, yes, I understand why the UAW are tanking, but the problem is the employers are boxed in. There's no way they can meet the UAW demands and survive. It's mathematics. Anyway, let's talk a bit more macro stuff because it's so important to Bitcoin. And literally, when things like inflation goes up, it makes people look for an inflation hedge. The inflation hedge didn't catch on last year, but now people are talking about it again. That there was a tiny little spike of overall increase in prices. It did escalate to 3.7%, a surge from July's 3.2%. But meanwhile, the annual core inflation saw a slight decline, settling in at 4.3% in August compared to 4.7% in the previous month. Observing a shorter duration, core inflation displays a pronounced deceleration, with this core CPI advancing at a 2.4% annual pace, which is very close to their goal. And that is a significant decrease from the 5% annual rate in the 3 months before that. So per the chart here, we will have anomalies. There's huge latency in some of these measures like owner's equivalent rent, etc. But oil is going to hurt, like we discussed before as well. So speaking of oil, gasoline controls inflation. Said that since day one. Here we are. This is the Consumer Price Index. Select items changed since January 2021. Food up, all items up, core up, but gasolina up a lot. That's what matters, ladies and gentlemen. And there's nothing Jerome Powell can do to control OPEC and OPEC Plus, controlling the supply. Now, speaking of Jerome Powell, there is now a 97% probability of zero hike in the next six days when they have the next meeting. So everybody's sweating about interest hikes. They can't anymore. Let me explain why. Look at this. Tax receipts in the US, and probably all around the world it's the same, are in severe contraction. And this chart stood out because notice the shaded areas. They are recessions of the past. And in each of the last three, they corresponded to similar decline in tax revenue. So it's as if tax receipts forecast, a dip in tax receipts forecast recessions really, really well. We'll see. The tree. Thank you so much for joining. Let's also talk about how bad the Armageddon is. And hopefully the Fed are looking at some of these numbers. And this cool little chart here from Dylan LeClaire shows you. Let's start at the top. We've got the US public debt to GDP. It's going to be 130% soon. By my estimations, currently 121%. You've got the US 10-year, which is long-term interest rate, 4.3%. They typically add about 300 basis points onto that to calculate the 30-year fixed mortgage, which takes us to about 7.3%. There we are. Treasury interest expense as a percentage of receipts, 33%. Let me zoom out. 1/3 of all government revenue now is spent on interest. It's ridiculous. And more money is spent on interest than on defense. Quite a bunch more. And it's only going to explode as half the debt rolls into much higher rates than it was at before. And then deficits as a percentage of GDP, 12-month moving average, 8%. And those deficits are about to explode like we've never seen before. It is a really bad situation. If the US government was a stock, it would be valued at 0. And that's just a reality. Now let's look at mortgage rates. I just touched on them. You can see they've been in the 7s now for 5 weeks, which means the new buyers that only have 20% down simply can't borrow a couple of $100,000 at 7%. Is just too expensive, especially with all the other inflation going on as well. And despite all this happening, and despite the recession in many parts of Europe, the ECB decided to raise their interest rates 25 basis points. I know it's not a lot. I know it just takes it up to 4%, a lot lower than the US at 5.5%. But you can see here that it was probably the most consequential for more than a year. There is a whole bunch of dovish people in the ECB, but a lot of hawkish people too. And again, they've probably been listening too much to Jerome Powell about we've got to take everything down, inflation down to 2%. But remember, a huge part of the cost is driven by energy in Europe. They're not in control of energy. Gas, natural gas, oil. Anyway, my mind, my small little brain boggles every day. And let's talk about a couple of stocks for a second. The ARM IPO today at 20 times sales. Now, when you compare that to other companies, that's an extremely juicy valuation. Like, SaaS companies typically trade at 10 times sales. A traditional company trades about 6 times sales. This thing is trading at 20 times sales. Now, I know they're very profitable, etc., but they're slowing down too. So, per my ARM IPO video I'll share here later, it is not a good investment. So I was waiting for options to be activated and then ready to jump in. And in fact, you can see here, it is dropping already. This is the stock chart. It just opened a few hours ago. And it obviously, like any IPO, it bounces out of the gate and then it sells off. So it was up above 60 for a while. I think it opened up at 51, 56. And now it's dropping down to 59. Let me just check actually the current price. Oh, it's back up to 64. Good. Target is 70. Anyway, now Warren Buffett, he did dump Hewlett-Packard as well. And, it's kind of what happens to these companies over time. Large, big tech companies, and Hewlett-Packard was a huge stake within Berkshire Hathaway. And of course, they've got to let it go because these companies become very big and quite stagnant. But let's look at the chart for 1 second. You can see here, Hewlett-Packard is holding up okay. Yes, obviously, Berkshire Hathaway was selling off for a while. But maybe they're also going to pivot to AI somehow. So not the end of the day for Hewlett-Packard. Do I own it? No. But again, not in that bad a shape at all. We'll see what Warren does with all that cash. He'll probably buy some more Occidental Petroleum because that is going up. So with that, everybody, thank you so much for coming. Hope you enjoy the content. Smash the like if you do. And a big thank you to everyone on Patreon who make all this possible. Biggest community, finance community on earth. Thanks, everybody. Happy Thursday. I'll see you all tomorrow. Bye.